Good afternoon, good morning, good evening, depending on where and when you will be seeing this video. This is the King of Waves, and you are going to be having a nice time with me on this session, Global Macro with the King of Waves. My name remains Mr. Akimbode Damilola, the lead analyst at Potential Miners International. Before we begin today's session, I want to quickly apologize to everyone that could not get our video last week. I was a little bit strong, so I could not come on the board to record a session for last week. We apologize for that inconsistency. Is because of my health, and I want to really, I want to hope that you had a very nice trading week last week. So, without further ado, let's quickly dive into what we have for this week. If you are seeing this video for the first time, this is Global Macro with the King of Waves. This is a weekly analysis that we ensure that we come up with every week at Potential Miners International. And this is a session where we believe that an average trader can have insight into the currency pairs or assets to be looking forward to trade for the week. And we do our analysis capturing fundamental analysis at the global level, sentiment analysis at the global level, and of course our technical analysis is a robust analysis that capture the directional bias of the big players in the market. So in all, our the framework of our analysis is the global perspective of the happenings in the forex market. So today, like our usual practice, we are going to start with the fundamental analysis, and that will take us straight into looking at the interest rate of the major currency pairs. The major currencies in the forex market, the likes of Australian dollar. If you can see my screen, you will notice that we have all the major currencies on this side of the chart, and we have the corresponding interest rate. So we just overview what we have as of now, the standpoint of the interest rate, because we believe that forex market is the game of interest rate, and until you begin to see it that way, you are going to be shooting yourself a lot of the time on the leg, and it's not going to really help your trading on the long term. So you want to really focus your attention to start with on the interest rate of each of the currencies. Then you now begin to pair currencies on the basis of interest rate divergence. This is very important, and you don't want to joke with this. So for today is 14th of April 2026. The interest rate for Australian dollars stand at 4.10%. That of GBP, Great British Pound, stand at 3.575%. The same thing goes for United States dollars with interest rate of 3.75%. Canadian dollar and New Zealand dollar still maintain interest rate of 2.25%, while euro is maintaining interest rate of 2.15%, as you can see on the screen. And Japanese yen, the interest rate is 0.75%, while Swiss franc, the currency that is taking the shape of the safest safe haven after United States dollars, is maintaining interest rate of 0.00%. Having said that, the next thing we do is to look at, if you are going to be comparing currencies, which of the currencies should you focus on. So what we usually do is to look at the currencies with the top three currencies, or the currencies with the highest interest rate on the upper side, compare it with the currencies with the lowest interest rate on the lower side of the arrangement of the interest rate. So what that means is that you want to be looking at Australian dollar as against either Japanese yen, euro, or Swiss franc, as the case may be. And of course, when we say this, we are saying this because this is the identification phase of our analysis. You want to analyze or pick currency pairs based on interest rate divergence. Before we now dive into the sentiment, which of course, the sentiment standpoint at any point in time is expected to optimize your choice at the fundamental level of our analysis, which is the identification phase. So, but to pick or to draw inference from the fundamental analysis of the interest rate divergence or standpoint, you want to pick currencies with very high interest rates. You want to compare it with another currency with a low interest rate so that you can have a clear trend. So just like I was giving example, you can also pick GBP and JPY. You can pick GBP and of course Euro. You can also pick USD, compare it with CHF, and also pick USD, compare it with JPY. And all of this is for you to have pair of currencies that you can be looking out for to optimize with the sentiment overview of the global market. I want you to take note that you don't just do one analysis and go straight into trading in the forex market. You want to identify currency pairs based on interest rate divergence. Then you want to move to the sentiment analysis phase of the whole thing so that you can optimize your choice of currency pair, because even when you have a currency pair of which pairs high interest rate with low interest rate, if the sentiment of the market shifts because of an unexpected event in the global market, it can tweak the direction of the movement of that particular currency pair as against to what you are expecting. So that is why it's very important as a forex trader. You want to balance your analysis. You want to do fundamental analysis. You want to optimize with sentiment analysis before you now go to your technical analysis, where you'll be looking at where can you position for a trade. And that is what we do at Potential Miners International to maintain or trade with a level of hedge that can keep us consistently profitable in the forex market. And having said all of that, we want to look at what are the expectation of news data that we have for this week. So today is Tuesday, 14th of April 2026, and by 1:30 we are expecting news release for core PPI month on month for the United States dollars. That is a very important news release for us. And of course, we overview the rest of the week. The only news release that might be of interest to us is the gross domestic product month on month for Great British Pound. And of course, I think interest rates, unemployment change and unemployment rate for Australian dollar. This is also important. However, we don't trade the news releases. We just want to follow the news releases to know where or when there might be a disruption in the market because of reaction to the news data. And most importantly, what are the data sets that policymakers, when I say policymakers now, I mean the central banks of each of the countries that we have been considering, the 8 major currencies. What are the news releases that will be of interest to the policymakers as to deciding the next point of the interest rate, whether they are to hike it, to hold it, or to cut it. So at Potential Miners International, our analysis when it comes to looking at the news releases is not to pick the news release and be trading with the news release as it were, but we want to ensure that we follow the most important news releases, especially those ones that are closely related to the decision of the interest rate of the central bank of each of the currencies of interest. So having said all of that, we want to move to the sentiment phase of our analysis, and this is where we will look at 5 major indices. These indices will help us to be able to view the standpoint of risk in the market on a global level. So I will start with the S&P 500. If you can see my screen, you will notice that over the last 2 or 3 weeks, we have been in a similar risk-off environment where the S&P 500 traded predominantly to the downside. But currently, as of today, 14th of April 2026, the S&P 500 index is giving us a predominant bullish structure and is trading above the cloud. This is the cloud, and this is signaling that there is a level of confidence coming back into the market, and this can be probably traced to the ceasefire, the 2 week ceasefire between Israel, United States, and Iran, and it's very central. So investors, they now have a level of confidence to be able to push their money into the stock market, push their money into assets with expectation of high yield. And this is saying that there is a level of risk on coming back to the market. But we don't just want to look at one index and conclude. We want to overview other indices so that we can have reference points to back up our decision of the risk tone of the market at any point in time. So we look at the Dow Jones Industrial Average Index, and that has also given us a bullish structure, although it's yet to be trading above the cloud. Hopefully between now and the next 2 days, the Dow Jones Industrial Average will be trading above the cloud as well. The next one is we want to look at the Nasdaq Composite Index, and we can see that backing up the standpoint of the S&P 500 index, the Nasdaq Composite Index is trading above the cloud with a predominant bullish structure on the daily chart. And this is now double confirming our overview of the sentiment of the market based on the stock market indices to say that for now we have recovery from risk off into risk on in the global market, and this is very important. Is an important information for you as a forex trader. You want to know what the investors on the global scale, what are they looking at, how are they seeing the market, and this is very important. So we want to move on to the remaining two indexes that we use for our sentiment analysis. Then we move on to the VIX, which is the fear index, and confirming what we have come up with on the stock market indices. You can see that the VIX is trading at 18.07, which is below the 20 threshold, and is now double confirming or triple confirming, if there is any English like that, to say that apart from the fact that the stock market index or indices in the likes of the S&P 500 and the Nasdaq Composite Index, they are trading above the cloud and predominantly bullish. The fear index of the market on the global scale is telling us that there's a level of stability in the market, and investors, they now have confidence in the market, and the fear has subsided. And of course, it's because of the temporary ceasefire to the war between United States and Iran. And we need to take note of this, because in the next 2 to 3 weeks, we don't know what will happen again. So you don't want to follow the market blindly at any point in time. You want to observe what is going on per time before you put your money in the market. So having said all of this, the last index we want to consider is the dollar index. Like I usually say, in the forex market, dollar is the king. So you want to pay close attention to what the dollar is doing at any point in time before you take your position in the market. And this is very important for your stability in the forex market. So currently we notice that the structure on the dollar index is bearish, although the price is yet to close below the cloud. So we are expecting that all other things held constant between today and the next 2 days. Dollar should close below the cloud, which is going to now clearly confirm that we have a tone of dollar aversion in the forex market. So having said all of that, if we want to look at the summary of the 5 indexes for our sentiment analysis, we can conclude that there is a tone of risk on in the market. However, the dollar is pushing to the downside with an expectation that if the dollar push down today, tomorrow, and next tomorrow, we are going to be clearly in a risk on dollar aversion sentiment of the global market. And this has implications for what you are to position to buy and to sell in the forex market. So what we want to do is to look at the structure of the dollar index now, and our conclusion will be based on that. Until if the structure changes, we want to conclude on the structure of the dollar index now vis-a-vis the movement of the stock market indices and the fair index. So in summary, we have a risk on dollar aversion sentiment in the market. All other things held constant. I want you to pay close attention to what I said. All other things held constant. Remember, anything can happen at any point in time. But as of today, this afternoon, 14th of April 2026, we want to conclude based on the structure of all the indices of our sentiment analysis to say that the sentiment overview of the global market, I mean to say global market, is risk on dollar aversion. So what does this mean for you as a forex trader? Let's now pick one or two assets, then we'll analyze together. Let's start with the gold, then let's see what we are expecting. This is very important for you to say that, okay, having analyzed the fundamental in terms of the interest rate divergence of different economies, and then having optimized this analysis with the sentiment of the market, what can I be looking out on the chart? Which of the assets should I be focusing on? So we want to start the analysis with gold. And you will remember the last 2 weeks that I was able to come up with analysis. You will remember I said that gold is still on a buy directional bias. However, because dollar was gaining strength in the last 2 weeks, gold could not move anywhere. So what we are expecting for this week, looking into next week, is that if the dollar aversion tone increases, which means investors keep dumping dollar, we want to expect gold to pump to the upside. Remember that I said that with the directional bias on gold is a buy. However, we are not going to take any position until gold closes around 1.5,000, maybe 200. Take note of this, 5,200 or around that particular price, then we expect gold to pump to the upside. All other things held constant. So between now and the next week, it's possible that you have gold pump to the upside. However, at Potential Miners International, we want to take our trade only when gold is around the window of 5,150, 5,160, 170, or 5,200, and it retraces. Then we will now be looking out for a buy on gold. So it means that on gold for now, we are not going to be looking for any set trade. Why? Because the directional bias on gold is a buy. And the tone of the market, as we have overviewed from our sentiment analysis, is risk on dollar aversion. So if the dollar aversion template increases by investors dumping dollar aggressively, you expect gold to pump to the upside. And this is the dimension or dynamics of capital flow in the global market. You don't just want to come to the forex market and bring your hard-earned money and begin to pump into the market, looking at green candle and red candle to say that it's going to buy, it's going to sell. You want to have idea of where capital is flowing to, where capital is flowing out of on the global level, and the rationale behind it. This is how you can trade or approach the forex market professionally and stay for a long time in the market. Otherwise, you will be frustrated out of the market in no time. So because of time, let me just look at one more asset. If I let me see if I can do one or two. Let's see BTC. What are we expecting? I will do BTC, then I will pick one other currency pair to analyze. So for BTC, I said that we are expecting a sell on BTC. So nothing will make us buy on BTC except if BTC move from where it is now, 78,000, and close into 100,000. That is when we'll begin to buy BTC. So, but for now, we are expecting a sell on BTC. However, because of the tone of the market, the decision of the dollar is still affecting where BTC is going, in largely, and that is why you now see a ranging overview on BTC. But expectedly, we are expecting BTC to drop down. If that might not happen this week anyway, we expect BTC to drop down into the region of 52,000. So, and it means except BTC give us a sell bias, a sell movement, we are not going to be taking any trade on BTC. So we took, I think, one or two trades on BTC, and BTC refused to move to our direction, and that was what gave us the loss for the last 2 weeks or so. Last week I was a bit strong, we could not pick any trade. So, but I think upper week we tried selling BTC, but it kept reversing, and even though our condition was met, but BTC did not give us the expected projection. But however, that has not changed our expectation on BTC. We are still expecting a sell on BTC into 5,000, into 52,000 or thereabout, into 52,000 thereabout. So that is a template of our expectation on BTC. So let's look at one more other asset. Let's see GBP JPY, and let's overview what we are expecting for GBP JPY. Remember that I said that the risk sentiment overview of the market is risk on dollar aversion. Now this risk sentiment is very strong for a buy momentum on GBP JPY. Why? During a risk on, capital will be flowing out of JPY. Now GBP has interest rate of 3.75. When you compare that to JPY of interest rate of 0.75, you will notice that there is a very wide interest rate divergence. So we expect that GBP JPY, looking forward, as of from now till the next 1 or 2 weeks, we expect a massive buy on GBP JPY. However, you are not to just jump into the market and be buying GBP JPY. If you are not on our Telegram channel and you want to position for GBP JPY, I will advise that you wait for GBP JPY to come to somewhere around, to retrace back to somewhere around this place. Let it retrace back to this place around 212.500. 212.500 here, then you expect a massive push to the upside. All other things at constant. So this is what we are expecting for GBP JPY, and the sentiment of the market is in support of this. For a risk on dollar aversion, massive inflow of capital will be coming into GBP, massive outflow of capital away from JPY, and of course you can expect that because of the carry trade template, GBP has a very high interest rate relative to JPY. So everything is lining up pretty well for GBP JPY, so we can position for a trade on GBP JPY for a buy, not a sell, a buy, because all our expectation when it comes to directional bias is for a buy on GBP JPY. This is how we overview the market at Potential Miners International, following a well strictly laid down rule that we looking day in day out, without having to tweak our strategy because of the dynamics of the market. And we look at the market from a global perspective, following what the big boys are doing in the market. So I want to really encourage you to say, if you want to stay long in this forex game, you want to really begin to look at the forex market from a professional standpoint, looking at the global standpoint when it comes to interest rates, looking at the global standpoint when it comes to the sentiment of the market. And if you want to trade, you want to trade in the direction of the market. And when I say the direction of the market, I mean whatever is happening on the monthly, the weekly, that is the direction of the market, period. Any other thing is like you are gambling. You will make money this morning, before evening you will blow the money again, and you will not be able to scale your game doing that, and that will not really paint forex market as a profitable endeavor for you, both on the intermediate term and on the long term. So I want to really encourage you to stay connected to us at Potential Miners International, where you'll be getting insights on weekly basis or at interval, where we deem it fit to come up with educative video that can really help you. Then you can also connect to us by connecting to us, or contacting us through our channel, or connecting to us on the Telegram channel. Is free. You can be there to pick free signals, and let us build a community of profitable forex trader. Until I see you in the next video, I remain Mr. Akimbode, the King of Waves. Thanks for listening. God bless you.